Investors Chronicle.
Hello and welcome to another episode of Lee and the IC. It's Monday the 3rd of February as we record. I'm Alex Newman in the Investors Chronicles corner, and on the Lee side of that equation we have none other than Lord John Lee of Trafford. John, good to see you. How have you been?
Fine, all well.
Excellent. We have a bit of a special episode this month. We will, as always, be breaking down the latest happenings in John's portfolio. But for the opening section, we are returning to our occasional subject, I suppose, of financial education. As most listeners will already know, John has since 2006 been a life peer in the House of Lords and served in the Commons between 1979 and 1992. Listeners may also recall his efforts, together with several other parliamentarians, to get the government to involve state schools in its then proposed bid to sell NatWest shares to the public last year. The idea being to give students an experience of managing shares and dividends. But he's also been a long-term advocate of improving financial literacy, encouraging wider participation in investing, and has written books on the subject. But today we are joined by one of the country's youngest parliamentarians, that's Cameron Holt, who recently got in touch with John to discuss his own efforts to improve the way financial literacy is taught in UK schools. Last March, Cameron began a 2-year term, I think I'm right, as a member of the UK's Youth Parliament. He's also studying for his A-levels, but he has as well found time to publish a study on the state of financial education in the UK today and is now campaigning to make it a statutory part of the curriculum. Cameron, thanks so much for joining us today.
Thank you very much for having me on. I'm very happy to be here.
Fantastic. Let's just start by getting you to tell us a bit more about yourself. What drew you into politics, and to sort of maybe explain the purpose and the setup for those who may not be as familiar with the Lords, say, of the Youth Parliament.
Yeah, absolutely. So what drew me into politics, quite simply, is seeing decisions that I don't like and seeing things happen that I wouldn't have done myself. And even at a young age, I had ideas about what I thought was right and what I thought should be done. And by seeing people make decisions that I didn't agree with, it invoked some passion within me to want to change those things. And not only that, seeing decisions I supported made me want to rally behind that and made me want to put my name to something that I thought should be happening in this country. And in terms of UK Youth Parliament, I was elected back in March last year after lots of canvassing, tirelessly going around schools, speaking to lots of children, getting them to vote. And it started my 2-year term up until March 2026. I am non-partisan, which means that I represent only myself, and I work to create change and opportunity for young people without endorsing any particular political party, which comes with its strengths and its weaknesses. It's often very hard to keep my mouth shut when people are making political decisions around me, and I'm not allowed to show which party I'm affiliated to whilst I'm doing my Youth MP duties. It doesn't mean that I can't have a say in my own personal life, but it means I have to keep the two very separate.
Understood. Okay. And so you have a kind of local constituency, but also a national remit. Is that right?
Yeah, absolutely. So in terms of locally, I represent Bassetlaw in Nottinghamshire, but I also represent the East Midlands on the Youth Select Committee in the House of Commons. And then all the youth MPs will convene and speak nationally rather than locally.
Okay. So, I mean, there are innumerable issues that you can get yourself involved with. Why financial education?
Well, for me, my two major passions in life generally are politics and maths. And if you put them together, you get something resembling financial education. So it's something that I'm very passionate about and believe that even if you hate money, it's crucial and affects your life every single day. And therefore, it's something that I really think should be rolled out nationally.
So in terms of the problems you can sometimes see in politics, let's start with some problems. What are the gaps you currently see in the curriculum and its delivery? What are the real world skills that we're failing to prepare tomorrow's adults?
I think it's being comfortable within money. I think money is something that we as a society have created to be a taboo, and it's something that we fear. And I understand that because it's a very private and intimate matter, but it affects all of us, and we need to feel secure and confident in our money. And I don't feel like young people progress into adulthood with the knowledge that they need to succeed financially. Now, you can go much, much deeper into it than that when it comes down to student loans, navigating university debt, taking out car insurance, lots of things that young people have to do whilst they are still young people. People now have to take financial decisions before they become adults, which is, I think, a very new phenomenon, especially when we now progress onto online money and finance has become something that you can do using your phone rather than tangible cash and notes. It's something that affects young people down to very young ages. I know that children at the age of 11, myself included, have bank cards, and that's something that comes with many benefits, but on top of many dangers such as financial fraud and navigating those things. And so not only do young people need to be equipped with the knowledge ready for adulthood, but they need to know how to remain safe financially right now.
To take a practical example, I mean, how would what needs to change differ to the financial education you have received? I mean, you're still in school, so you've kind of got your finger on the pulse more than we have. So
Yes.
where are the gaps that
So
you've
I
seen?
believe that the gaps are in its delivery. So I think that lots of teachers themselves, and this is not the fault of teachers
Mhm.
whatsoever, do not feel comfortable enough to plan their own lessons and to deliver their own lessons on finance. And that I think is the barrier that teachers, rightly so, shouldn't be expected to be economics experts. They teach in their own fields, but we are burdening teachers with the responsibility to create their own content, and they therefore don't know what needs to be added, where I think that financial education needs to change so that a statutory curriculum is rolled out nationally. So all schools have to deliver the correct and the same and most appropriate content, meaning that all children, regardless of their demographic, regardless of whether they attend state or private school, receive the statutory financial education that they need.
Okay. I mean, I've got to say, reading through your report, I was trying to reflect on my own experience of school. I don't really remember any financial education
Yeah,
either at
absolutely.
school or home. I mean, John, just to bring you in, I mean, what are your memories of financial education? I suppose both in the classroom and at home, and how did that prepare you
Well,
for your life?
frankly, zero at
Right.
school. I have no memories at all of anything to do with finance at school. In my first knowledge of investment and finance, really, well, certainly stock market investment was really through my father, who was a doctor, and with his modest savings, he used to invest and used to enjoy it. And my recollection when I was sort of 14, 15, is of him sitting by great piles of the Investors Chronicle and the Stock Exchange Gazette, smoking his pipe and studying investment matters. And I used to put his leg about it, and then started to delve in myself. And so I bought my first share, I think, when I was about 16. So I've been doing it a long time, but certainly at school, near zero. Just one comment, if I may, on what Cameron is saying. I think also part of the problem is that so many teachers at the moment feel under such huge pressure anyway, that the last thing some of them want to do, or some of the schools want to do, is to take on another subject
Mhm.
or another area, really. And so I think one's looking to particularly keen masters or mistresses at school, to actually lead on financial education. I think they have to be probably interested themselves to do it properly and
Is that
enthusiastically.
to say, when we're trying to understand how we got where we are, is that because financial education has historically just been seen as something that a household like yours provided for, fortuitously in your case, but is that how this country sees financial education?
I think that is historically what's happened, and so we end up in a situation where the vast majority of youngsters come out of school and approach university, and then maybe through university, and then as Cameron has just said, faced with decisions on maybe renting a property and student loans, and maybe trying to buy a car, maybe endeavouring to save to put down a deposit on a house or a flat, and by and large, no real background or awareness of that. I mean, obviously, some of them from their parents, would have accumulated some knowledge, but for so many, there is total ignorance, and I think. Cameron's done, one or two surveys. I think I'm right in saying, Cameron. Main conclusions are, I think, that a very substantial percentage of youngsters would have liked financial education, but really haven't had any.
Yeah.
Absolutely. I surveyed over 700 young people and found that 64.1% have no recollection of any financial education right now. Now, the government does advise that financial education should happen, but clearly from that data alone, it's not currently working. If we've got more than half have no recollection whatsoever of any financial education. But contrary to that, only 4% of young people voted that they did not want financial
Mm.
education, meaning 96% did want it or weren't sure. Now, never before have I come across a topic where such a major majority of young people want to learn about something.
Mm.
So with that many young people rallying behind this, wanting to learn about money, it's preposterous to suggest that we shouldn't be teaching it properly.
In your study, did you break down or try and identify the areas that young people, for want of financial education, thought there were areas that they wanted to learn more about, or were there particular worries?
Yes, I broke down into what topics were being covered currently. I found that student loans had only 19% of students even knowing really what they
Mm.
were, which is an alarming statistic to think that only 1 in 5 children actually know anything about student loans. Further to that, there were topics like financial fraud that were extremely low, and I would argue that that's one of the most important topics. Because even if you don't want to dabble in the stock market or don't want to get involved, things like financial fraud affects everybody, whether they like it or not. And on top of that, I went into lots more topics about learning about tax, income tax, national insurance, things that will start to affect children as they become older. And I think it's crucial not only for children to understand how that works ready for when they become adults, but also to be able to speak to their parents. And we've just come out of a cost of living crisis where parents will have been struggling a lot. And I think it's crucial for children to almost be able to sympathize and
Mm.
understand what's going on in their households rather than being really worried but not understand what they're being worried about.
Yeah, of course. And these are obviously the most pressing issues that financial education can address in a way. In terms of investing, which I suppose is perhaps further down the line when it comes to the question of financial education, are either resource or sort of legal limits, i.e., under 18s aren't, able to deal in financial securities? Did that almost sort of stymie the level of interest from the responses you received?
I think to an extent, but there was still lots of interest there still. Think that lots of children need the foundation cementing before they can then start to look into things like the stock market. But I
Yeah.
think there's lots of children that are really interested and do understand that there's very little point in their money being sat still doing nothing. And I think lots of children are aware and alive to that. And I've heard from lots of young people that do say to me that they want to work out how to best manage their money and how to make it work for them without them doing any work. I think as a generation, my generation have almost been taught to try and be efficient and try and work less and earn more.
Mm.
And I think that children are alive to that, but need that basic knowledge before they can then start to navigate that.
Presumably, a small percentage, Cameron, will have junior ISAs.
Yes, yeah,
I mean,
absolutely.
have we any idea of the number of junior ISAs in existence?
I know there's young people around me that do have them and people do talk of them, but even myself, I mean, I'm sat here now and there are topics like junior ISAs that I don't feel like I know enough about.
Right.
And I feel like that it makes so much sense for me to I should have been taught about that in
Mm.
school. And I myself don't have one, but I know some young people do around me. But it's a very small percentage, and it would make perfect logical sense for it to be greater than that. And I should be sat here now knowing more about that, but
No, no.
unfortunately, I don't.
I was going to ask John as well to bring you in. I mean, unfortunately, the NatWest shares idea, it's hit something of a roadblock. But I do understand that you've had some success speaking with companies that are potentially keen to offer some shares to schools, either locally or nationally.
Yes. Well, certainly. Firstly, I've not given up
Yeah.
on the NatWest idea. I will be raising this in the Lords in debate because the government still have 8% of NatWest shares and could easily do something in turn. My suggestion and recommendation is that they give £5,000 worth of NatWest shares to every state secondary school, and the pupils themselves decide how to spend that £350 a year dividend. On junior ISAs, one of the things that I'm campaigning on is that grandparents like me should be allowed to take out junior ISAs themselves, as it were, and not have to go through parents. This is the situation at the present time, because many grandparents, I think, if they could do it more easily, take out junior ISAs
Yeah.
for their grandchildren.
Absolutely. I suppose it feeds into a broader question about what you're talking about at the top of the podcast, Cameron, about general social attitudes to money. And I suppose it's a question not only of what the education system can provide, but the broader family system, the family networks around young people. I mean, Cameron, you are preparing to go to university soon. You said you raised the question of student loan debt. That's obviously a huge question for 15, 16, 17-year-olds to be wrestling with. It's also, I suppose, in a slightly clinical sense, a big question of a return on investment,
Yeah,
thinking in
absolutely.
your future. Are schools providing support for managing these questions at the sharp end, do you see, of when it comes to university?
Well, the school that I attend is a part of a trust called Outward, and I think they do deliver very good financial education
Mm,
and advice in this department, especially. But that is because that they choose to, not because they are
okay.
forced to. And there are lots of schools, speaking to peers that go to different schools, that do not get given that advice. And I think we, as a generation, are facing a shift where young people are moving towards less orthodox routes where they don't necessarily attend university. And I think there's a place for that because I don't necessarily think it's the best place for everybody.
Yeah.
I myself do feel that I would definitely go to university. And for lots of young people that do want to do that, it's very, I think, very daunting to try and navigate such a big financial decision that's going to affect you for many decades to come. And even as a middle aged person, you are still lots of people paying off their debt from university. And it's a big question of thinking, is that worth it? I myself think it is, but that's from my own personal research. And a lot of that I've had to do at home with my parents. And I feel that for the young people that aren't fortunate like I am to have parents who will support me through that, who have to take decisions like that independently on their own at 17 years old, that is a ridiculously daunting task. And
Mm.
without that support at school, I don't understand how young people who don't have the support at home could be expected to navigate that and understand what bursaries they're entitled to, what their finances are going to look like as they progress into an independent life.
Mm. I was wondering, we were talking a little bit about what a statutory financial education curriculum would look like. When we spoke before, we were talking a little bit about the role of business studies, which is, obviously an elective GCSE subject. But at the same time, there are elements within that course about, long-term cash management, the returns on investment, etc., modeling debt, which allow students to think about, or maybe are an entry for students thinking about those sort of long-term questions to do with money. Is there an argument that making the business studies course more compulsory, that could help solve some of the questions we're trying to?
Yeah, so I did do GCSE business myself, and are lots of elements in that that do mirror what happens in real life.
Mm,
I don't think the solution is making the GCSE business subject itself statutory, but rather taking some of its content and putting that into citizenship or PSHE lessons. That I definitely think is the best route, and by making that statutory, it will mean that all students do not have to elect to do a particular subject, but will receive the content that is in business now in their PSHE lessons, which they should be having currently.
yeah, I'll put this question to both of you. I mean, let's say you've got a 15-year-old, maybe the 4%, we don't need to make too much of that small minority who are just completely uninterested in financial education. But, for perhaps a larger proportion of 15, 16-year-olds who may not be that interested in business, how do you close the gap for those students who may not be inclined to think about money in a big way or may not prioritize it, but who still would benefit from financial education? What's the bridge to helping those people?
Well, obviously, the direct bridge is if parents or grandparents, can take out some sort of junior ISA or give a certain amount of pocket money, which young people can save. So grandparents and parents obviously have a role, but in many cases, for whatever reason, youngsters don't have that degree of support, and hence my thinking behind the idea of the NatWest shares being gifted to schools. And also, parallel to that, and you asked about a little bit earlier about this, Alex, also endeavouring to encourage regional public companies to think about giving a small number of their shares to their local schools that they hope to recruit from, or where their employees' children go, or cash, they may be simpler, to actually, from their normal charitable giving, to give some cash to the school to enable them to buy some shares in that regional public company, as it were, and thus receive a dividend that they're involved in spending. And so you're building a bridge.
Cameron, for those students who, will have lots of interests, age 15, 16, thinking about all the paths ahead of them, how do you compete for their attention when it comes to the role of money and finance, some things that some people just won't naturally be
Yeah,
inclined
and I
towards?
understand that all young people might not necessarily have a burning passion for
Mm,
money. And I think that's okay because that represents quite a few people in this country. But I think that we need to ensure that even if they don't have that zeal and that passion for finance or economics, that they have the basic foundations and knowledge that, regardless of where your interests lie, you really do need. And I think that I do really feel strongly that nearly all young people would still listen to that. If you could really sell to them and really make it clear that this is going to affect your life and you will have to take these decisions and this knowledge will help you do that, I think that will help to bridge that gap.
And Cameron, do you think my ideas for somehow getting shares to schools, as it were, and letting the pupils themselves decide on how the dividend or similar is spent, actually would make it more interesting for youngsters rather than just to have academic lessons, if you follow me?
Yes, absolutely. And I think we've developed a culture where all lessons are delivered in the same way, and that doesn't work for all young people. So your idea with the NatWest shares, I think, would not only allow children to develop skills in a very practical and real way, but would also have very good benefits come out of it, where young people can actually spend that money and not only learn the skills and how to spend it, but actually improve their schools via their hard work and their decisions. And I think a lot of the time we set up programs that are somewhat tokenistic to tick a box to say we've included young people. But this idea regarding the shares will ensure that young people are actually taking the decisions, and what they decide will directly affect their outcomes, and it will really teach them these key ideas in life on how your actions and your skill set will determine what you get out of it.
You can now get 12 weeks of an Investor's Chronicle print and digital subscription for just £12. You'll get instant access to our website and our app, plus the magazine delivered to your door every week. Check the terms and conditions in the show notes for more information.
To get down to brass tacks, then there is one specific change you're pushing for on the back of your report, which I think listeners of this podcast can help with, and we'll make sure to include a link to it in the show's notes. Can you just outline both the petition and what it is you are trying
Yes,
to change?
so absolutely. The word that I keep peddling is statutory. Now, that differs very slightly to compulsory. So, at the minute, financial education is advised by the government and is technically compulsory, but there are no resources to help with that. And that goes back to what John was saying about the workload of teachers and how if they have to prepare these lessons themselves, it's not going to be done. And the issue is currently that, as it is not a statutory requirement, schools are not assessed on financial education as much as other elements. They don't get exam results from them. Ofsted aren't as particularly interested in financial education at the minute because it's not statutory. So, understandably, schools will put most of their time and focus into other areas where they know they are going to be assessed on. So, I believe that the Children and Social Work Act, which was introduced in 2017, under Section 35, we can make any part of PSHE or citizenship lessons statutory, literally just by the Secretary of State for Education's approval with no need for further legislation. This was done for relationship sexual health education in 2020, and that has been extremely effective because it now means that schools have to deliver a core framework that the government sets out, and they are assessed on it by Ofsted, which therefore means that schools are compelled to deliver it, obviously with an opt-in, opt-out thing with it being sex education. But now all schools do deliver the appropriate sex education that they need to, and the exact same can be done with financial education without the need for further legislation. It was actually the last Labour government in 2010 that introduced the E to PSHE, which doesn't stand for education, stands for economics. And I now believe that with our new government ready to push forward, I believe that this is the perfect time to ensure that all young people get the statutory financial education they require. And that is what my petition is aiming to do. So I really urge all listeners, if you agree with anything that's been said today, to put your name to that petition, because we need all the support we can muster up, and not only to sign it, but also to share it further with people that you know, with any connections that you have.
So potentially a quick win in theory.
Absolutely. It's very rare that we come across something that most people agree with and is really logistically very easy. So it really does seem to me like a no-brainer.
And you hope that you have at the end of it all, you have a very substantial number of people who've signed the petition,
Hopefully.
and that will influence the
Yes.
Secretary of State, stroke government.
Yes, absolutely.
There's not a particular figure you're aiming for which will make it, as it were, compulsory for the Secretary of State to take action.
There is no figure that will make it definitely happen, but by hitting 100,000, it will mean that it's submitted for debate in Parliament, which will massively, massively raise its profile, and will mean that the Secretary of State for Education is definitely aware of it. And once I am certain that the government is aware of what I'm doing, it will mean that there will be chance for me to properly quiz them on why this has not already happened.
Cameron, we wish you every success with your petition efforts and, of course, your studies.
Thank you very much.
After all of that, honestly, it's very inspiring stuff. John, let's wrap up the podcast with a look at your portfolio. Standard disclaimer at this point, anything that we do discuss shouldn't be taken as an invitation to buy or sell or be construed as investment advice, obviously. And as ever, we urge you to do your own research. But John, just a quick word on markets first. UK share indices hit a high last week, but it's been a bit of a bumpy start to the year for global markets. And we now may be looking at a major expansion of Trump's trade war. How has your portfolio responded to all of this
Well,
noise?
this year things have actually been going quite well. By and large, I've seen an upward movement in share prices. The majority of the companies I'm invested in that have reported or given any sort of update on trading, have indicated things are going quite well. Not wholly so. I have an investment in a company called Vianet. They had a slightly more cautionary trading statement, and the shares dipped a little. But by and large, trading statements and announcements from companies like Anpario and particularly Concurrent Technologies have really driven prices forward. So things were looking pretty good. But of course, now along comes Trump throwing the grenade of tariff wars into the situation. And obviously, markets are very unsettled. My gut feel is that at the end of the day, we probably, with a bit of luck, will be spared tariffs. That, I think, is a fair conclusion to draw from what Trump has said, or they would be set at a pretty low level.
We being the UK economy.
We being the UK economy. And then within that, even if certain tariffs are put on, I would expect quite a number of exclusions, for example, like say defence stocks. I would have thought that the last thing that Trump would want is actually to have an increased defence bill because of UK products supplied, which will carry certain tariffs. Yeah. So overall, I think we are approaching a more unsettled period. But having said that, I think when investors look around the world, they do see that the UK is quite an attractive area to invest in. The prices are quite a lot lower. I think we'll still see some very significant M&A activity during the year, and I think to repeat, I think there are indications that investors are now thinking that America maybe has reached a short-term peak, and it's time to redeploy some funds in the UK on more traditional values and also with a good dividend yield as well.
Let's go to the actual companies in the portfolio. I think we've got one new acquisition in Town Centre Securities. What is this business and what's your history?
Just going back a little bit historically, when I first started investing, there were a huge number of small family-controlled public property companies. And by and large, most of those have been absorbed or taken private, but there are still one or two left, like Mount View Estates, for example, who own a lot of rented property in London. But there is also Town Centre Securities, run and controlled by the Ziff family of Leeds, which I've been an investor in on and off over the years and have just bought back in, buying shares at 118p with a net asset value of about 280p. So effectively, one is buying pound notes for 40 odd p. And this is an extremely well, in my judgment, extremely well managed and stewarded business with 60 odd % of its portfolio properties in Leeds, including the Merrion Centre there, and then 25% or so of group properties in Manchester in the Piccadilly Basin area. And they're also in car parks as well. They've been in car parks for a long time. They sold a number of their car parks years ago and are back in that business. And overall, I think to be able to buy into that sort of company on the sort of discount that I have been able to do, with a running yield of 4% plus, I think is quite attractive. So I've made a modest investment there.
So, and I think this follows your purchase of, was it Supermarket Income REIT, was the last I suppose, new position, also at a big discount. Is this property theme intentional, or is this?
No, I don't focus on any particular sectors, as it were. I look at specific stocks across a whole range of sectors. In the case of Supermarket Income REIT, it was really the dividend yield of nearly 9%, which attracted me. Company owning Supermarket REIT owning something like 75, the freeholds of 75 supermarkets let to the majors, the high dividend yield, and also they were on a discount, but their discount was only 20%. On the other hand, Town Centre on this massive discount to assets, I think is a very attractive situation, taking a long-term view. So happy to tuck both in my portfolio.
In a entirely separate sector, but a company you did just touch on as well, Concurrent Technologies. I mean, I think we had Miles Adcock, the CEO, on this podcast just under a year ago, and since then the company shares have more than doubled in value. I think you've said this is now your second biggest holding. What's been going on?
Yes, Concurrent's had an excellent couple of months with the announcement of further contracts on the defence side. I think investors and institutions are increasingly recognising that this has the potential to be a very significant and a growing company, and have been buying the shares and pushing the price up. So that yes, it's now my second biggest holding. It's overtaken Treat, and it's second only to M&G, which is basically bought, or has been bought, for the very high dividend yield and hopefully some capital growth.
I'm glad you didn't put it all down to this podcast good luck charms, but if it counts for anything, then hopefully it works for Cameron's petition as well. The only other thing I just wanted to touch on, I mean, in scoping out for our next CEO interview candidate, I was told that by PZ Cussons, which you've mentioned a few times in recent episodes, that ongoing transactions prevent their executives from engaging with the media. So make of that what you will. I don't know if you've been picking anything up from your.
I think the PZ
sources.
Cussons situation, if I've got a couple of minutes, is probably one of the most interesting on the stock market at the present time. I know the company pretty well. I was on the board as a non-executive director many years ago. But of course, in recent years, they've had a very difficult time, and the capitalization of the company has come right down from 1.8 billion to about 340 million. And yet the company hasn't made any losses, trading losses. It's been hit by a number of poor management decisions, and particularly the devaluation of the naira, because it does have this business in Nigeria. Now, they announced some months ago that they were going to consider divesting themselves of their Nigerian business and also sell Saint-Tropez, their tanning business, which is a brand leader, and nothing more has been heard. My view is that, assuming they do divest all or part of their Nigerian and African interests, that the company shares will be looked at in a wholly different light, and there will be an upward movement and a revaluation. But I am surprised that they haven't announced so far the sale of Saint-Tropez, which I would have thought it was a much easier and cleaner and clearer thing to sell than much more complicated African transaction. And I can only put that down to two possibilities, really. One is that they haven't been able to generate the interest in Saint-Tropez, or the price which they'd hoped, and I think that's unlikely. Or, and of course this is pure speculation, that the company itself, the overall group, is actually in play, and that investors looking at the worth of their African interests have realised that the whole company is, in my judgment, and I suspect in their judgment, significantly undervalued, that the value of the UK and global brands and their businesses in Indonesia and Australia, and brands like Carex and Imperial Leather and Sanctuary, are worth a lot more than the present 340 million group capitalization. So I think it's a question of watch this space. It's been my share of the year, my tip of the year, as it were, in a competition that participate in. We'll see what happens, but I think it's going to be, very interesting to see what does happen. And I'm watching it very closely, and have increased my holding quite substantially in the shares.
Yeah, and hopefully the a tit for tat tariff trade war doesn't complicate things more there for whatever's going on behind the scenes. I think we might have to leave it there for this month. If you have any questions you'd like to put to John or suggestions for future guests, you can do so by emailing me at alex.newman@ft.com. But until then, all that's left for me to say is to thank you for listening. Thank you so much to Cameron for coming down today and discussing your report, to John as ever for your thoughts, and to our producer Maddie Apthorpe. So until next time, goodbye.